My name is Brent Conrad with CR Lending. We're a hard money lender based out of Prosper, Texas. We're a direct hard money lender and not a broker. So general guidelines are really easy and simple. So we don't mess around. I like to say we're like having a rich uncle to go to, except having hard money rates. It's because we have no credit check, no appraisal, no survey, no background check, no tax returns, no bank statements, no prepayment penalty, no pre-inspections on the property. So it's really all a borrower has to do with us is give us the property information and we give them terms. So we will do new construction, raw land, rehab, single family residential, rental properties as well. But one thing that we're trying to branch out into is doing more new construction or more developments. Maybe like, so for example, we're about to look at doing a deal in Dallas. It's a 4 townhome project in Lower Greenville from ground up. So that's what we're trying to branch out to, but we'll basically look at anything, even commercial. I don't know if I had mentioned that, but we'll do commercial as well. And on the long-term rentals, though, we kind of focus more on bridging those guys rather than doing the actual long-term 20-year fix. So most of our guys will get a loan just to bridge it and then refi out of us.
And how long of a term?
A 6-month term is our standard, up to 70% of the after repair value. We're in the range of 2 to 3 points. Typically on the lower end of that, 12.25% interest, and then a flat $1,500 processing fee.
What's your typical loan to value for those?
Up to 70. So basically everything across the board, minus land, is 70% of the after repair value, up to. Of course, sometimes it's 68, sometimes it's 73 if we feel comfortable with the deal in the area and maybe the borrower is more experienced. So, but raw land is going to be mostly around 50% of the after repair value, or I guess value. Land, there's really no after repair.
With the pricing, you said the rates are around 12.25,
yep.
2 to 3 points.
Right.
And then what was the other fee?
And I would even narrow that down more. It's really more like 2 to 2.5 points, right? So it's not, we rarely do 3, but those are extreme deals where maybe a borrower really wants to get into a deal and we're not comfortable and we want to have extra, if there's extra risk involved, we might charge that extra whole point, but that's a very rare case. The rate for us right now is just flat across the board. It's 12.25%. So there is no variance in rate. Now we have options that are 10% and 4 points, 11% and 3 points, or I say 10 and a quarter, 11 and a quarter and 3 points. But nobody really goes with that option. I think I have 1 or 2 borrowers in the last 7 years of doing this take that option, just because, in my opinion, points are where it really matters. Interest rate, who really cares when you're in and out in 3 or 4 months?
How about geographic areas? What markets are you lending in?
Yeah, great question. I meant to say that earlier. So Texas, Tennessee, and we're just now branching out to Florida. But all of Texas and all of Tennessee, minus Memphis, Tennessee.
How about with Texas? Which metro areas will you consider?
Oh, yeah, DFW, Dallas-Fort Worth, Houston, Austin, San Antonio. I mean, we'll even branch out to some secondary markets. Those do get a little bit more tricky, especially if it's on a couple acres. But we've done them and we can do them.